So last year I got to interview Sam Zell, and I told him that we're best buds. And I said to him that he has to add me to his Christmas gift list because he produces these amazing music boxes. They're really very cool, very expensive. He writes a song himself. And I tell Sam, you got to send me one of these music boxes. So he goes back to Chicago, and he says to his assistant, that awesome young man, that very impressive young man from Toronto, send him a music box. And then the music box goes to Mo. So he's stealing all of my thunder. And then he sent me a video taunting me about this music box and how I'd never get to see it. Anyway, aside from the fact that Mo stole my music box, I'm happy to know that I finally reached the pinnacle of respectability and success that people would confuse me for a short, dynamic Jewish Ukrainian. Anyway, last year, I was lucky enough to interview Sam Zell. I told him that we were best buds, which we are, and I actually have a hat that proves it. It says Zell and Cooperman Best Buds. He took the hat and he wore it for the entire time. This year, my lucky streak continues because I get to have a conversation with my mentor, Rai Sahi. Ray doesn't know that he's my mentor yet, but I think it's going to be kind of awkward for him to turn me down in front of this whole room, so you're going to have to play along, Ray. Let me tell you a little bit about my mentor, Ray. Ray's an entrepreneur. He's a serious entrepreneur. His career has been defined by success across a wide variety of industries. In a few minutes, we're going to sit down with Ray to learn how he came to be chairman and CEO of Morgard Corporation, chairman and CEO of TWC Enterprises, which most of you know as Clublink, and CEO of Temple Hotels, which has a portfolio of hotels across Canada. Ray made the Forbes Billionaires list in 2014, not because of luck, but as a result of 45 years of adding value in the businesses that he's been in. He's a leader of the Indo-Canadian community and is recognized as one of the most influential people in golf. And Ray, I don't think you'll be offended if I say that it's not because of your golf score. We're exceptionally lucky to have him here today because he doesn't usually do these kinds of events. So please join me in welcoming Ray to the stage. Okay, so today you get to witness my first mentorship session with Ray, which could be a bit awkward because we're just getting to know each other. So to make it a little less awkward, I picked up a great bottle of California Cab so that we can have a casual sit down. It's just really two regular guys sitting down to talk about investing over wine. So Ricky's going to come up on stage. Ricky's going to bring us some wine. He deserves special recognition because Ricky does all the hard work in our office and I get to take all the credit. He deals with all the investors and he's my sommelier. And also to cement our mentor-mentee relationship, I had hats made, okay? Ray, you get to wear a hat that says Evan's Mentor for Life. And I got to wear a hat that says Ray's #1 mentee. All right, let's get down to business. We can please.
Thank you. Are you really going to get a glass of wine or just a show?
Okay, let's see. So this is a Stone Street Legacy 2010 Cabernet.
How did you know that I like red wine?
I do my research. Okay, it's been decanting for an hour. Okay.
I have a driver. I'm not a driver.
Okay, good. So then I'll pour you.
You have to figure out whether you are.
I planned ahead. Don't worry.
Oh, thank you.
Okay, so that sounds like we have to finish the whole bottle while we're up here. I'll have to figure out how to turn this into a drinking game. So, okay. Cheers, everybody. Cheers, Ray.
Thank you.
You can't drink water.
No, it's okay. Thank you. Well,
right.
I'll have a first sip. Thank you. Okay.
That's actually excellent. Okay, this will be easy. Okay, so Mo says that we're supposed to be talking about risks and opportunities in real assets. Generally, to be most successful, I usually just ignore Mo and do the opposite of what he says. So that's what I'm going to do. I'm going off script for a few minutes. Because Ray, you're a force to be reckoned with in business. And instead of having you up here just as a talking head, which we'll get to, we'll ask you to make your predictions and your super forecasts. But you're a self-made man. And so I think it would be a great opportunity for us to find out a little bit about how you got to where you got to. So you moved to Canada from India in 1971. At that time, you could only find work unloading boxcars for $1.50 an hour. How do you go from manual labor to the ultimate measure of prestige and success, which is being my mentor. Oh, and a billionaire and a few other things.
Well, first of all, I did arrive in Canada in February 1st, 1971 in Montreal. And at that point, you got to make a decision. My brother was living there, so I was staying with him. And I had to go find something to do. But background was I was a undergraduate from India, and I worked for a bank. One of the commercial bank, like was called Central Bank of India, would be like Royal Bank of Canada here. At that point, it was a point of just working somewhere to get out of the house, and that's all I could find. And so from there, gradually I got into, I left that, and I was doing my, I became a CPA eventually while working part-time. And I got into, I sold life insurance for 5 years for Prudential Insurance Company of America. From there, I went to work for a bank, the Bank of Montreal in Calgary, back to Toronto in commercial lending, and then left in 1981. I thought I met enough smart and bright and entrepreneurial guys who I was lending money to, that it may be an opportunity for me to get out there and try to get into business. I just got married, I had a daughter, and I left my bank job making $75,000 a year, and my wife said, "Are you gone nuts? Crazy? We got a house, we got a mortgage to pay, blah, blah, blah." Anyway, the only thing I remember saying to her, I said, you know, when I came to Canada, I worked for $1.50 an hour. I'm a lot more smarter today, and if we don't work out things, we'll go back to work somewhere else. So that was the beginning of they got me into a manufacturing business. You know, bought a company with a bunch of investors. I suppose that's where I learned a little bit at being a bank that use other people's money if you don't have your own. and that is what I started. I did put my own. I did put a mortgage on my house and bought a company, and that was the beginning of it. And I stayed in that business for 2-3 years, and I sold it in 1984, 85, and made $4 or $5 million, and I thought I died and gone to heaven. So I thought.
So what was the? I mean, everybody would like to go into a business and do that, and 4 years later sell it for $5 million. But what was the secret that? I mean, what was it that helped you achieve that?
Well, I think, well, first of all, my partners, who were also, one of the partners who was an operating guy, so who from where I learned how to assess the business, do it, and we were able to grow the business in a 3 or 4 year period of time. And CCL Industry at the time were one of the users of those product, and they offered us a deal, I think we had bought it for $7 million. We had $2 million equity. They offered us $18 million, and I said it was time to move on. You know, and that's really, so we were able to increase the revenue and the profitability and all of that, and then there was an opportunity to sell and move on to do something else. And
then you kept on moving on. I mean, one of the questions I as my mentor, you know, one of the questions that somebody would have as a mentee is, you could have stopped, right? And you didn't, and it probably wasn't because you were doing it only for the money. But what was it that kept you going and you didn't stay? Because eventually it was $5 million, then it was $20 million, then it was $100 million. But you kept going.
Yeah, for a moment I thought, it's good. I said I can go to Florida, which I did. And I suppose I could walk the beach only so often. Then I said, listen, another opportunity came up. And it was a trucking company, and we ended up buying into that company with a bunch of other partners, and grew that business from 1985 back up to 89, and sold that business for, I had only put in $1 million in that, actually, out of that. Rest was other investors and other people in money in the sense. Then we sold that business for $70 million to Federal Industries on those days, and that probably was, and by then I owned 70% of it. I had partners like Gordon Capital, Royal Bank, and similar kind of a guys who got to provide the capital and all of that. And we were able to grow that business. So one of the things I found out over these years, wherever I went, I stayed in one industry. You know, I didn't really do 5 different things. You know, when I got into trucking, I knew everything about the transportation, every competition in Canada and US. Because I was kind of preparing at the end of the day, you've got to exit. So you start planning your exit and you start targeting who are the people you're going to do a deal with.
Right.
And that's really what had happened in that case. And I quickly, from there, I ended up actually, now I had 40, 50 million bucks. And I thought I would now take a little easy, and I thought I would be an investor now. So I ended up putting, this is all public knowledge, I ended up putting $25 million in a company called Ackland, which was struggling in auto part distribution and industrial distribution. And I thought I'd just sit on a board and guide the people and see. And I studied a little bit on that. That was an opportunity. It was undervalued, and the stock had come down from wherever the hell it was down to $8, $9, and there were a bunch of institutions who were very not happy with the performance of the stock. And to make the long story short, I ended up actually running that company. It was losing $14, $15 million a year. And I thought it was the time to get into. And what we did, again, I only focused on that industry on both sides of the border. Right. So we made like 25 acquisitions over the next, and that is one of my skills, because being an accountant and a banker, I can figure out, and of course, having sold life insurance, I can have some liberal selling skills to convince people what I think is that they should come along with me to invest.
So I want one thing that, you're being a bit modest, because you're not mentioning, or you haven't mentioned yet, that, those were not necessarily easy paths. So I'll say that you've been involved in a number of transactions where you were involved in what I would call gentle encouragement to change, but others might call hostile takeovers. And in fact, you didn't hear it from me, but some have called you the closest thing to a Wall Street raider in Canada. So that's a lonely path. It's a tough path to take. Okay, metaphorically, you're like this tiny little guy against the machine, and you're swimming upstream, and that can be daunting. So you've had to, because you talk about focusing. So you say, look, you got to focus in an industry, and a lot of these companies you went into, they were broadly diversified, and you had the opinion that you've got to focus in on something. And I guess management didn't always agree with you, right? And you had to battle. And what set you up for that ability to battle and to take the pain associated with doing things that are not popular and against the grain?
Yeah, I suppose it kind of became a bit of a habit as I got into the trucking, which was a struggling industry. So you could get in on the floor at much lower level, hopefully, whether it was going to turn around or not, but it did. We bought companies like we bought Kingsley Transport from Paul Martin, who became a partner with me for a while. It is, in order to find value, you need to find challenging opportunities to whether you could turn around or not. And the only thing I knew to grow, the question is, how do you go and where do you grow? You need to be able to grow the revenue so you can grow the bottom line. And then the issue really was making acquisitions and integrating them. And later on, I suppose I got into, as I sold Ackland and got into the real estate, where we are now. And that happened in 1997, actually, after having sold 2 divisions of Ackland, one to W.W. Granger and one to CarQuest. We had cash. And at that time, we decided that, so the phase of life changes. Now I said, okay, I got enough capital in Ackland, which was a public company. We changed the name to that. And I thought, now I had thousands of employees in trucking days and thousands of employees in Ackland days. Now we have a capital, now it's time to actually get into something which is not as onerous, and I thought the real estate was. Now I was kind of getting in what I would call a investing mode. And one of my friends who's still on my board, David King, and he told me, Ray, in real estate, you could run $10 billion real estate with 10 people. I'm like, okay, that sounds, so it's more capital intensive and all of that. So that was one of the things. And what happened, there were a bunch of companies which were undervalued at the time, Revenue Property, Gold List, and all of those. Some of them need a little bit of hostility. We bought the stock in the market and then trying to, as I was given this name that I'm hostile. I was never hostile to the shareholders. I was only hostile to the incompetent management, as I put it. And we were able to prove that we were able to do certain things. And now we started in 1997. The first investment with gold is $40 million. And now Morguard Group of companies own or manage $20 billion of real estate and some private equity. I didn't really plan it that way. I mean, my objective really was that we had about $400 million at the time in the company. I said, we'll invest and earn 10%. I will make $40 million a year and I'll be happy and have a handful of people to work and buy assets and build assets and move on. But as you get into it, it's like jumping into the water, and then you say, well, it's not that difficult to swim.
Right.
So you keep moving on, and then another opportunity came on, so now here we are. So we are with I think this is all public now. Morguard Corp has 3 companies, Morguard Corp and 2 Morguard REITs, apartment REITs and commercial REIT. And then we manage about $8 billion for institutions. And here we are. At the time, our stock was trading at 16, 17 bucks. I think now it's trading at about 170 or 180 bucks. Is I actually never really focus on the value of the stock, really. It is, most of the analysts, I always say, listen, you guys are overvaluing my company. You say, you're the only CEO always tells me that the guy from RBC tells me that you're saying you're overvaluing my company. But kind of here we are now, and I think you mentioned Temple. That is just recently, we thought there was an opportunity. Who knows? Only time will tell. It's pretty small in the scheme of things for Morguard. We only got $45 million invested in it. So we'll see whether.
So I'm going to come to, I mean, we've kind of moved through, I guess, to where you are now today, which is real estate and golf, which I guess has a real estate angle. So I'd probably get fired as a moderator if I spend too much time. I mean, personally, I'd like to know more about your background. If we have time, we'll get to it, because I actually want to know a little bit more about the India days as well. But to ensure that I don't get fired as moderator, I'm going to actually speak to the topic at hand,
okay,
which is risks and opportunities in real assets. So just
all right.
don't forget your wine.
I'm not forgetting my wine.
Okay, so in case you don't know what real assets are, Investopedia defines them as physical assets that have value due to their substance and properties. I have no idea what that means. Now, let's just call real assets tangible things that you can touch, like real estate, as opposed to intangible things like intellectual capital or goodwill. Okay, to get started, we're going to do a quick lightning round. I'm just going to throw 2 choices at you, and you quickly choose one of them, and then we'll come back to discuss your choices in a bit later. Okay, so I'll give you a few softballs just to get started, so you can sit back and relax. Okay, Florida or California?
Florida.
Florida, okay. White or blue tees?
What's that?
Do you hit off the white tees or the blue tees in golf?
Blue tees.
Blue tees, okay. All right, a little more serious. Bullish or bearish right now?
Bullet.
Bullish, okay. Real estate, buy or sell? I guess you're a buyer.
Well, I got to explain that. You can't really real estate. Is it housing? Is it a commercial? Is it so? Real estate, you need to really figure out what are you talking about. Shopping center, office building, apartment building, a house. Most people have a glass of wine and beer and talking about house prices, condo prices, and all of that. I'm the wrong guy to predict that. I mean, I got out of condo business back in 2005.
Okay, but that says something. I mean,
it's a speculative business, and I don't define real estate as a speculative. It's a long-term hold and long-term investment.
Okay. All right, so I'm going to come back to that as well. Canada or the U.S.?
Well, I'm in both sides right now. So I mean, we are growing more in U.S. now than in Canada.
Okay, I'm going to come back to that one too. Interest rates, up or down?
I don't think there's much left to go down, man.
Okay. All right, so we'll say up. Foreign investment in Canadian real estate, a problem or not a problem?
Not a problem.
Not a problem. Okay. Boxers or briefs?
Boxes or what?
Boxers or briefs? Long underwear or short underwear?
God, short underwear.
Okay, briefs. Which would you rather own, bridges and toll roads or forests? So in other words, infrastructure or timberland?
Bridges and
Toll, okay, infrastructure. Leverage, high or low? I bet you're gonna say high. Medium, because of your...
man, I've been on both sides of it. High leverage when you're doing something, and real estate, we are probably the lowest leverage of all real estate companies.
Okay.
So when I say lowest leverage,
So when you're the mentee, high leverage. When you're the mentor, low leverage. Okay, mulligans or no mulligans in golf?
mulligans.
Me too. Okay, and a very important one. This didn't come up in your history, but you were a wrestler?
Yes.
Full Nelson or half Nelson?
Full Nelson.
Full Nelson. All right. If we have time, we're going to come back to your wrestling days too. Okay, now that we're warmed up, let's start with the most obvious question in everybody's mind. What's your view on the Canadian real estate market? And I know I'm going to get in trouble. I guess I have to be more specific. So
Yeah, you got to ask me whether
I'm
it's
going to ask it
housing.
in a different way, okay? Where do you see the opportunities in the Canadian real estate market, if any?
Well, my real view is the real estate, I'm talking about the income producing real estate. I'm not talking about the housing. Housing has a different kind of angle to it, and I can come back to that. I think my belief is the interest rates are at the lowest point. There's not much left to, and the valuation of the real estate is tied to what happens with interest rate. So at some point, it will start inching up, and that would have an impact, negative impact on real estate, income producing real estate, and would also have on the housing that really is. So my view is, although I've been wrong for the last 4 or 5 years, it just kept going, but I don't think there's much room left. So now is not the time. I mean, and it's not that as simple. That doesn't mean just to go and sell all your real estate holding you want. Because in real estate, you have a certain core asset. Once you sell it, you can never get it back. And you have a tax implication, you got this, and you sort of really. So, if you talk about stock market and all of that, I actually, notwithstanding I don't see public company, I don't worry about what stocks do. It's just the stock will do, there are a lot more people who can predict and do super forecasts and where the stock market will go or not, and I don't necessarily lose any sleep over whether the stock market is going up or down. So,
Right. Okay, so, and you've got the North American residential REIT, I guess, I was looking at the evolution of the allocation, and it's moved more towards the US than Canada, and I would assume that's because that's where you're seeing the opportunities. And you think that trend will continue?
Yes, in the short run. And the reason behind that, there's a lot more availability on the rental apartment side in the US as opposed to Canada. And Canada, I mean, we build a little bit here, there. Canada is all the old product, and there's really no availability in the sense and all the growth will come from the US.
Right, okay. And this will morph into the Clublink discussion in a second, but just as it relates to real estate, I mean, in this market, it's certainly getting harder, right? It's getting harder to create value. And so when you sit there and you're an allocator of capital, of a lot of capital, how do you create value in this market? And on the other side of it, how do you manage risk in this market?
Well, I don't actually look at creating value or risk. Now when you come to a point, for example, we do speculative things, and we just finished building in for sale, and you view that as a long-term hold, and it may be very low yield. For example, we might be getting 3% yield in the beginning and all of that, but you build an asset that you're going to hold on for long, what some of them might call intergenerational asset that you hold on to it. So I view that as an opportunity in a way. But there's only so much you can do in that area. As to the people who want to in and out, I think the real estate, particularly in the income-producing real estate, is a long-term hold. You have to think of long term and not, and, to some that, even that when you get in trouble if you have a wrong asset.
Right.
So,
But they're a little bit in conflict with each other, right? Because you have the notion of, look, I think interest rates have nowhere to go but up from here, if that's your premise. But
and the values of real estate will come down.
will come down, but that means you're going to keep your powder
So,
dry.
so let me tell you a very simple example on that. There's a lot of experts here who can gauge where the stock market goes up and down. Now, you can plan there. So let's say if I believe the market is going down, you sell the market, sit in cash, earn 1% and get back. The problem with the core real estate, once you sell, you can't just say, okay, I'm going to come back and I'm going to buy first Canadian place, or I'm going to buy the tower I built in Chicago. You can't do that. So you got to have for that you have to have a capital. So fortunately, I'm in this place now. I do have a capital, and I can take a low yield for a long time to come. But if you're just thinking of, I don't know. I don't want to comment on a stock market, the real estate thing, whether real estate stocks will go down or not. I have no idea. No.
But when you did, I live near those buildings that you built in Forest Hill, and they're good-looking buildings, and I know people who are moving into them, and there's obviously they're going to be good assets, but you built them, and the economics in that deal I think were fairly low in terms of a cap rate, but obviously you found the capital to make that work. So is that an unleveraged, is that kind of just a build and hold forever, or was there?
Yeah, well, those are the kind of, we built one 10 years ago at Bay and Wellesley, similar kind of thing, and those time it was, the math were different, but still we held it and it worked out okay. We didn't build, this is not like, condo guys do different. They build and they sell, they have 5 to 10% equity, and they build a building for $50 million, takes you 4 or 5 years to build, and you make $10 million bucks. It looks like a big return on a very small equity. That's not what and those guys have to keep doing. It's like house building. You build 100 and you sell 100 and you build another 100. And in capital return, it's a totally different strategy. And my strategy has changed over the years. Now we build up capital, we have capital. So you take a longer term approach. So non-necessary, we don't build to sell. We build a few office buildings in Ottawa. They're also long-term holds.
Okay. I want to turn, if you don't mind, just to be cognizant of time, I'd like to cover Clublink just because it's an interesting, I guess, just even your decision to get into Clublink was interesting. If you don't mind kind of telling us how you decided to go in that direction. And then, golf is generally considered to be a challenged industry right now, and you're kind of it's a little bit of a diversion because you're an opportunistic guy who generally, finds an undervalued asset and then finds a way to extract additional value out of it. And how do you do that with something like Clublink?
Well, Clublink is it's one of those things. When the opportunity came along, I had done no research on nothing. That deal took place over a weekend because it was an opportunity. One of the company out of the U.S. owned this is all public knowledge, had owned 35% of Clublink, and they needed to sell because they had some issue with their own financial and all that, and they came on a Labor Day weekend, actually. I still remember that, 4 days before 9/11, because 9/11 hadn't happened yet.
Right.
So we closed the deal, and the only thing I knew at the time, we were putting 30, 40 million bucks, and I said, I'm going to have a control of 10,000 acres of land. That was the only thing I could think of. So I said, if the thing don't work out, we'll lose 40 million bucks and go home.
Right.
And that is how that happened. And we've been able to build that, and there are some opportunities in the real estate side of some of the golf. As you've probably seen, some of the golf courses are being developed for land. The land values have gone crazy, and that is one of the reasons the housing market in GTA has gone crazy, because indirectly the Ontario government has taken a whole lot of land out of the system with the green belt and this belt and that, but lots of golf courses actually are not developable. So my initial decision really was just a pure speculation at that time, that is the control of land, and actually that part is proving okay.
Right.
And I think it is a public knowledge now that we are in the process of rezoning Glen Abbey. I think, and the process will go on, and it'll be worth a lot more than that as a development as a land versus a golf course. Notwithstanding is if I personally use that golf course because I live 10 minutes away from it. So that is really commenting on the golf business. Golf business, both in North America, I mean, all sports business really are having, other than if you don't have any TV rights and all of that, and every sports franchise will be broke, whether it be golf or whatever it is. The golf business is, most people know it's getting expensive in the sense, it's the cost goes up,
Right.
of maintaining all of that, and the people are getting old and younger people are not coming in the game. So, but it'll always be golf. Most sports have gone through. The tennis, people just say tennis for them. I mean, we still have tennis. So there will definitely be golf. So there's other parts. Lots of golf courses are coming out of the system now, so which will take some of the supply out and all that.
Supply demand curve will even that. So I wasn't planning on going here, but maybe I will. If you're comfortable answering the question, I mean, politically, and we're in the lending business, and I know I'm starting to learn this because we have a piece of land in the Greenbelt that got dropped in at the last minute, so its value has gone down significantly unless you can try and find a way to get it out of the Greenbelt. Do you have an opinion on what needs to happen at the political level to make it efficient, again, for developers to get things done?
For what I know now of trying to take land out of Greenbelt, I don't think it will happen in your or my lifetime.
You're not telling me what I want to hear over here.
But no, I'm not telling you, because I got a lot more acres than you have in there. It's just, and I made my point to talk to some political senior people, even during the election. Nobody will ever touch it.
Even if there's a change to conservative government, provincially?
I'm talking about the conservative guy. When I spoke to ask him point blank, and he told me, this is a few years ago in Ontario government, he was trying to get elected, who happens to be a mayor of now, I can tell that. And he said, listen, it is done now. And while he was against it, but it would not be possible to get, and he was honest enough. He said, even if I get elected, I wouldn't be able to do it.
Okay, so you've just ruined my day, so I'm going to drink some more wine.
Well, the truth never hurts, actually.
In real estate, you've done this in a number of different businesses where you actually have fairly complicated businesses. I mean, you've made it sound pretty simple, but it's not. And so now you have an operating business with diverse real estate holdings. It's complicated. So my question to you is, what core competencies do you need to have to be successful in the real estate business? What is it that is it finding the right asset? Is it controlling the asset once you have it? Is it handling the financing well? Is it everything?
It's pretty well all of the above. First of all, you need to understand, and of course it took me a long time to, this may be relevant to saying, one of the senior guy at RBC then, who still is there, when we were trying to do the real estate business, he told me, he said, Ray, focus on one. Pick either apartments or a shopping center or an industrial building and all that. I remember telling him then that, I define real estate differently. To me, I define real estate as an income-producing asset, and that is what I'm focused on. If it pays rent, to me, it's real estate, whether that be an apartment or shopping center or an industrial building. And of course, we've been able, that's what Morgat is. Morgat is in all phases of it. And now, actually, he tells me, he says, maybe he was wrong. Canada is too small to just pick apartments only or this and that. So it's, I don't know what more I can say to you.
No, that's fine. Okay, let's just go back to your bullish, the U.S. You commented that condo is speculative, so you avoid that. I don't think we need to go there. The foreign, just one thing, because there's a lot of noise right now about foreign investment in real estate, right? I mean, you see what's happened in Vancouver and everything else. Did you want to comment on why you don't think it's a problem?
It's still, because it's a kind of it gets more profile than reality is, including condo business. Everybody talks about condo business. It's just such a small part of the whole economy. There are a handful of condos being built in Toronto and few in Vancouver. There's no market in Ottawa or anywhere else.
Right.
So, but everybody talks about condo. The condo could disappear and wouldn't impact much, other than a handful of developers who are doing it. You don't see any major player doing condos. You don't see any venture fund doing condos. It's the local entrepreneur developer, buy a piece of land, and build condos and pre-sell it. And so, in the condo, I don't know where housing could get impacted, obviously, but if the interest rate go up. On the other hand, everybody lives in a house. You're not go around and sell your house and hope the value will go down and come back to buy it. People just go on, and even that is the housing will continue to be built. Now, answer your question about the quote foreign mostly Chinese is you've seen that both individual Chinese money as well as institutional, you've seen some of the money coming. I don't think even that has a huge amount of an impact. It's the governments are getting involved. Of course, the BC government has put this 15% tax, and the federal government is trying to do something to do with and I don't know, maybe they just want to pay to be doing something. I don't think that it's going to have a whole lot of difference. In a big market, it's a small impact.
Right.
It just, because it talks about the press, that really, I don't lose any sleep over it.
So if I could convince you that interest rates we're kind of in call it a muddle through world, and that, they're not going up. Let's just say they don't go down, but they don't go up, or they don't go up significantly. If I could convince you of that, what would you, it would just make you acquire, or what would you do? You just acquire more real estate?
I don't think you would be able to convince me. That's the problem. I believe that they have hit the rock bottom and they have only to go up. Don't forget, there's other aspects of people that don't talk about who are impacted negatively by the interest rates, which are all the pensioners, yep. Life insurance company, they need to put money out, pension fund, they need to put a certain amount in government bonds and all that, and that is not sustainable either. So it's not, people talk about, well, they think nobody can afford to take the interest rate up. I don't think the governments, people don't realize there's no one guy who takes it just happens.
Right.
I mean, look at Brazil now, the interest rate of 15%. Even India, it's 10 or 12%. There's something happened somewhere. It's just not, all you need to see the historic perspective. It never stayed this low. I don't want to speculate. If you convince me what I would do, because I made my decision, the interest rate, so I'm going to continue to manage what I need to keep and what I need to sell. Yeah.
I'm debating whether I should change my position, but you haven't got me convinced yet. I still think interest rates are going to stay low for a while. Just a little bit of a different, more of a life lesson question, not necessarily real estate related, but it seems to be that throughout your life, you've gone and you've taken reasonably concentrated bets, and you've been very active in generating value, in trying to generate value in these undervalued, what you perceive to be undervalued businesses. So through that, your career experience, I don't know if it's fair to do this to you, but I'll do it anyway. Can you distill it down to kind of for your mentee, if I want to be like you when I grow up, what are the 4 key learning points for me, just in terms of what it takes to be a success, in your opinion?
Well, it really kind of goes back to, for every young man and all that, I've talked to a lot of them. First of all, you need to focus on your education. And you need to continue to educate yourself as you get through the universities and all of that. And And now we have all kinds of opportunity to learn on the TVs and Googles and all that. While these guys are asking questions, I said you could just Google what how many panels are there. So life has changed. So you need to continue to, and you need to continue to whatever you're doing, and know everything about that, which is so essentially I can tell you, most successful people work virtually all their waking hours. Even when I'm playing golf, I'm working, or even when I'm doing whatever I'm doing. So really, so you need to form that habit of that. And if you call that a sacrifice, you need to be able to sacrifice certain things, whether that may be a part of your family life, and there you need to, obviously you need a balance of that, but the question is, in order to succeed, it just literally requires to continue to upgrade yourself and continue to learn everything about what you do and what your competition do. It's not just a simple thing. The reason I've been in each industry as 10, I needed to learn what my competition is doing, what my industry, what those guys are doing. Are they going to get in trouble? Are they going to be able to, are there some that I'd like to sell it to them? Or are there some I'm going to want to take over their company? So these are all the, and then of course, a whole lot of, as you grow, you need to build a team together. You can't do all yourself. You need to be able to learn to delegate. You need to be able to, and even in delegation, you need to be able to tolerate inefficiency in the people you delegate to. You can't simply expect they will do what you would do, or you go crazy. That's all these things that you grow, and you gotta mentally grow with it. And you gotta change your style. Even my investing style has changed now. As when you get a certain amount of wealth, you go away from growing wealth to preserving wealth. And because my lifestyle ain't gonna change much if I make another few $100 million or something. That doesn't mean that you stop doing what you habitual of doing, but you change different kind of thinking. So that's was one of my part this is started back in the mid-90s when I decided to get into real estate, that it was now time to preserve capital. Not that I was planning to grow as much as it did. It just happened.
I have a funny feeling you're going to continue growing. That's my bet. If I had to bet, I would say that you're going to continue growing. So I'm getting waved at. I have 3 seconds left. Yeah. So apparently that's all the time we have for today. I'd like to thank Prime Quadrant for giving me the opportunity to pick up such a cool mentor. Also, thanks mostly to Ray and to you, our most gracious audience. I now would like to declare Team Ray and Evan as the winners of the Prime Quadrant Conference. So, Ray, I'd like to present you with the tag team wrestling belts, okay?
Thank you.
For Ray and Evan, winners of the conference.
Thank you.
Thanks.